Hi, I'm Bill Blain, strategist with Shard Capital. Today, let's talk about the UK. Over the last few weeks, the UK looks less and less attractive from any kind of normal investment perspective. We seem to be sinking deeper into pandemic depression. Rising infection rates are triggering lockdowns all across the country. We've missed the October 15th Brexit agreement deadline. The UK's credit rating has been downgraded to AA3 by Moody's because of the rising spend on shutdowns, and the Bank of England is likely to announce negative interest rate policy in early November. No wonder investors in UK Inc. are nervous. But cut through the noise, and the outlook for the UK really boils down to how you perceive three particular questions. The first is, how secure is the nation's pandemic response? And there does seem to be an increasing realization that the pandemic is now a long-term economic hurdle that we can't avoid. It's essentially very simple. The NHS will not be able to cope if a large part of the elderly population is infected. The young are essentially not in any real danger statistically, but all it would take to swamp the NHS's medical services is 10% over these over 65 to catch it. Based on the current numbers, that would mean hospitals would be full. Now, the government's done an appalling job managing and communicating the policy, which is essentially to stretch out the pandemic to keep the hospitalisation curve below the crisis level, which means, in the absence of a vaccine, this goes on longer and the friction that we're currently seeing continues. The second aspect is, what is the likelihood of a Brexit deal? Brexit is upsetting international investors, but the Brexit faithful go and still claim that a no deal is best for the country, but that's largely bravado. A deal is always going to be a better option, but not at any cost. Now, the rumours are still talking about a last-minute agreement with Europe, but the deal will have to be one that's pragmatic. It's not one where Boris or Macron or the faceless nomenclatura of Brussels are going to accept looking weak, but somebody will have to give ground, or else it will trigger another sell-off. And the third issue is, where is UK policy going in terms of fiscal and monetary spending? Now, we're pretty sure the Bank of England is going to go all in with negative rates on November the 5th. Is that a good or a bad thing? Personally, it's a short-term market plus. Long-term, very much bad. It's going to create all kinds of negative consequences and immense difficulties in terms of rolling it back in the future and moving the economy back into normalised growth and kick-starting the entrepreneurship that's always driven industry. We also have a clamour around what government should be doing in the crisis. Should Chancellor Rishi Sunak really be raising taxes and cutting spending to balance the budget when we face such a depression? Of course he shouldn't, but he's got to convince essentially economic illiterates in the Conservative Party and their party bosses that Margaret Thatcher was wrong about the nation having to stick household budgeting to balance the books. And I'm afraid in the Conservative Party, criticising the Blessed St Margaret is heresy. Now, Rishi Sunak has proved a very fleet-footed chancellor. He's earned praise for the speed at which he's launched the furlough programme, he's provided cash support to struggling companies, and he stood behind the economy as the pandemic took hold. He very quickly realised that extraordinary times required extraordinary measures. And now he's become the new poster boy for the Conservatives and the electorate's clear favourite to replace an increasingly jaded-looking Boris Johnson. But there has been criticism of Sunak, and it's come from these traditional Tories who still believe Margaret Thatcher's assertion that the economy should be run like a housewife running the family budget. They are asking, how is Sunak going to balance his spending against tax revenues? You know what? They're the wrong people asking the wrong question. The right question is how much more Sunak can do to boost the economy, to create jobs and growth and boost recovery post-Brexit. I'm sure that Sunak, in fact I know for a fact that Sunak is extremely well advised by his Treasury team, and they are all familiar with the possibilities of using the gilt market, that's UK sovereign debt, monetary theory and quantitative easing to make sure that money is available and increasing debt is not really a problem. But the problem is, though, that's a heresy to suggest that financial recovery can be funded via more debt. That's why at the recent virtual Tory conference, you heard Sunak talking about sacred responsibilities to strengthen public finances, about hard choices and balancing budgets. These are all coded messages and signals hinting at spending cuts and tax hikes, which were directed at the Tory shires. I sincerely hope he wasn't serious. Nothing will wreck the anemic UK economy as much as talk about renewed austerity. Now, the pandemic has severely stressed the UK economy, probably more so than any other Western economy. That's because so much of our economy depends on the service sector, and it's still optimal in terms of productivity. Brexit, as we know, remains in the balance. As a result, the stock market, the FTSE, now languishes below levels achieved in the last century. In fact, Apple is now worth more than the entire market cap of the FTSE. Unemployment could soar, according to the latest downside scenarios from the Bank of England. So the reality, though, is that even despite these issues, the UK will probably sort itself out. It tends to do that. The chances are that we will get a Brexit agreement, if not the one we were hoping for. The stock market's going to recover for no other reason that it looks so cheap relative to the rest of the reason. That means it's a buy at some point, and we will always be resilient, inventive Britain. The virus remains a threat of enforced shutdowns, though, and the reality is that pandemic response spending is going to deepen unless we can sort it out. Parts of the economy remain excessively vulnerable. This is not a conventional time. Conventional approaches will not provide solutions for this ongoing and very real economic crisis. Chancellor Sunak should be planning just how to maintain the pandemic battered economy, but also how to improve the eventual outcomes. He's been very clear that he can't save every job in every industry, but he has also been clear that he has the financial levers to move the economy forward. This is the time for more fiscal measures, not less, and it's not the time for a balanced budget. We've just seen a Conservative government throw the kitchen sink of monetary and fiscal policy into addressing the virus. They would be daft if they suddenly stopped now. History is full of central banks and governments mistiming rate hikes, causing economic mayhem, and that would be the same as a tax rise. Instead, this is the moment to fiscally reflate the UK out of recession and address social infrastructure and physical infrastructures that have been holding back growth for years. The government should be thinking big, not small. It should be thinking about how to reform the NHS and how to reform education so that the future generations most impacted by the virus actually have the skill sets to move forward. We need to be focusing on a more dynamic, sustainable economy, and that means spending money now. So where does that money come from? Well, it's interesting because despite blowout sovereign spending around the globe, we have seen very limited reaction in sovereign bond markets. Yields are effectively being managed close to zero through quantitative easing. And despite the massive amount of money creation since 2010, when QE was first used, inflation remains invisible. The UK government owns the printing presses and it can create as much sterling as required to inflate the economy. Now, I know that is heresy, but it would work in this market. Why? Because everyone else is doing it as well. Can it be done? Yes, if the government is willing to try. Can the government spend its way out of the pandemic recession without consequences? Well, that all depends if you believe in the magic money tree of modern monetary theory. However, can we really question its existence when the alternative is to sink the economy into an even bigger recession? I think this far we've seen that spending money works, and we need to hope it keeps working, because if we close off the economy now, that would really be the signal to sell the UK. So to Rishi Sunak, I say, be brave, Chancellor, move forward, spend some more. Thank you.